All right, so welcome in everyone for those that are tuning into the live and for those that are tuning into the recording. Today is going to be one of the three following days where the 3 days that are coming are going to be spent looking purely at the best textbook charts that I've personally traded in the past, with each day kind of focusing on a slightly different setup. With today's being the focus of distribution and more specifically the NVIDIA distribution. This is a chart that I've studied. I can't even tell you how many times. I have it memorized like the back of my hand, just by the amount of times that I've stared at it, the amount of times that I've traded it. Probably a bit too much than I should have, but still, I mean, so far from what I've been seeing, some of the cleanest reads that I've personally had in my entire career was trading this NVIDIA 6 month range, starting all the way from July. Now, this distribution is still taking place, right? We are currently in a stage three, and I do think we are entering into a stage four soon enough. Could be as soon as this month. I don't know exactly when, but I could see that potentially playing out. So, for the bulk of today's session, I'm going to be breaking down this chart, starting all the way back from when I initially called for it to be in distribution once again, right? And then we'll kind of backtest this whole action. I'll walk you guys through all the setups that I saw, the ones that I traded, the best opportunities, and how I was able to make a killing trading this range, even though technically price hasn't gone anywhere just yet, right? Like if you see back into the first day that I have marked out, which is July 31st, price is quite literally at the same exact point, right? Which is pretty crazy to think about. That price can do such a thing and you could still make a killing trading that range. Tomorrow's session will be covering a different type of setups, and then the day after will be another one with them focusing on setups that I've traded. Personally, I think tomorrow's going to be about accumulations as well as breakouts, and then the third day will be about mean reversions and parabolic shorts. So today you can think of it as going short mainly through distributive charts, the three setups I look out for in a distribution, and how to properly capitalize on them. And then tomorrow we'll be doing the same thing, but vice versa on accumulations and breakouts / going long. And then the third day will be about mean reversions and parabolic shorts / longs. So throughout each of these sessions, there will not be a presentation. Instead, it's all going to be on TradingView. And it's all going to be me walking you guys through the exact setups that I took, what I saw, how I took them, and how I can look for similarities in the future to capitalize on a similar move. You guys might think at this point that I have some sort of vendetta against NVIDIA, or that I hate the company, or I think that it's a bad company. I don't. Not at all. I just look at price and I focus on what price is telling me. And I also know that NVIDIA was the leader of the last cycle, right? The market cycle that we are in. And the leaders can usually also begin to lead us to the downside. Just like in 2021, when we had that massive post-COVID recovery. A lot of the names that were really pushing the market higher were names just like the Cathie Wood's ARK, and a lot of growth names. And then those led the market lower as we entered into the bear market of 2022. I think something similar could play out here in today's market, with semiconductors leading the move down, just like they led the move up. Right? I do think there's a lot of other stocks and sectors that also look bad, just like Max 7. I don't think the Max 7 is gonna move higher from here. But however, I'm mainly focused with semiconductors, and more importantly, the largest one, NVIDIA. Right? So let's go ahead and dive into the chart. And before I do that, I just want to quickly reference one point, and that is the distribution that we had initially in 2025. This was a very smaller distribution that played out, right? We've talked about this quite a few times with this base that we had set up back here, and that stage 4 that came afterwards. This base, right, really taught me a lot of things. It taught me how to trade distributions, how to be profitable within a range, but to look out for when to be short, when to look for the breakdown versus when to look for a rather lower high attempt. So a lot of my teachings and a lot of my experience came from this specific base. It also came from other distributions that I've talked about in the past, but this was the one that really solidified my teachings and my experience just by simply trading this and learning from it. So without further ado, let's go ahead and get started by talking about the current chart that we are in. Now, just by quickly looking at it, let me just remove the moving averages. You guys might be thinking, okay, these are quite a lot of annotations that I have, right? They're not. All of them offered some sort of trade opportunity, some better than others, right? With some being very, very A+ opportunities, and those usually came after, toward the right side of the base. So if you want to think about the right side, it just came after the failed breakout / overshoot right here. After October, I was really killing this chart, and I can't remember a single loss that I took except last week. Other than that, every single short opportunity that presented itself, I was there and I executed very well on it. And the reason for that is because I just came very, very prepared. So let's go ahead and actually get started by looking at, hold on, just give me a second. So let's go ahead and get started by talking about the base that we had prior to the OpenAI news that came out. So prior to that OpenAI bar that you guys might have just saw, this was a base that was setting up as to what looked like distribution, right? Obviously nowhere near what we have today as the base continued to be traded and the range continued to build. However, this base, right, did offer me quite a few opportunities and was the initial part of getting the ball rolling for me attempting this NVIDIA short. Now, NVIDIA has been on my focus list, or at least on my side watch / focus list, ever since July. Right now, you guys might be thinking that it's quite a long time for a name to be on my focus, but that is personally how I like to trade things. I like to have a good read on a certain name, and I like to maneuver around the chart depending on what the past couple of days are setting up and trade as I see best fit. So my trades on NVIDIA actually began slightly before the July 31st. They began a bit earlier with these mean reversion shorts that I started from late June, with this being one, then this being another. But I'll leave those for later on the third day when I break down some mean reversion trades, because I think those were great ones that offered really, really nice trade opportunities. The day that I thought at least topped price for some time began on July 31st. All right, so into July 31st, what we had was NVIDIA had already come off of a massive leg higher, right? As you guys can obviously tell, we squeezed off of the lows to the high of 111% and 79 trading days, which is insane, right? Some of the craziest price action that I've personally seen, and one that I personally did not expect to move this higher, right? I expected to stall out somewhere near the previous base, but we reclaimed it, used that support, and fueled even higher. However, into July 31st, we had some sort of climactic action that was playing out. Price had gone on a couple of days higher, right? 7 days higher without any consolidation. 5 trading days higher with 7% of action higher. And then decided to top off on the largest move. So from the low, right, from this day into this day, each day was kind of a 1 to 2% move. On the last day, right, we got the largest gap of 2%. And then from there, the move was pretty easy. And funny enough, this day was actually, it was, I believe, to be Meta and Microsoft earnings. Yeah. So the market on this day was also getting very extended, right? So the market was on QQQ, was just drifting higher. This was the undercut of the 21 day on Qs. It was war news with the Qatar base getting bombed, if you guys remember that. So that was the day that bottomed price, out of this kind of mini range, and then price went on a ripper on war de-escalation rumors, or it was news confirmed or whatever. From there, price began to look very, very exhausted. We had the FOMC on Wednesday, and then on Thursday we got a gap up, which was definitely unexpected, to really top out price. And usually that's what you want to see for a proper top to be put in, is a large gap at the highs that eventually gets faded. Just like when you want to see a bottom put in place, you want to see a large gap down that results into a very big bullish engulfing bar that bottoms price. So looking back in the video, right, my execution on this trade was very, very simple. I was looking for the mean reversion, right? And I won't dive too deep into this because this is more of a mean reversion rather than a distribution chart. But it was certainly the beginning signs of price actually entering into distribution. And that is, as you guys can see, very bearish price action on the smaller time frame, starting with the weak orb. As I mentioned, the weak orb is very, very key to my trading, especially to trading the downside. If you guys simply backtest this price action from July 22nd up into the day that price topped, you guys couldn't pinpoint me one singular bearish orb. And there's a reason for that, right? As long as there's no bearish orb, the short setup, at least intraday, is not as valid. Although it did work on this day, for example, it did not put price into a top. The day that we actually had a bearish orb was the day that price actually topped out. It was also on the highest volume that we've seen in over a couple of days. So pretty simple stuff. After I saw that, I traded the lower high, got short and held it into the next day where we gapped down, and I caught a 6% move on the underlying. So this gave me quite a lot of quite a good cushion to start trading this range with. From there, price began to consolidate, and then as we tested into this all-time high, we began to sweep price, right? So this was late August, where the market was definitely in a very, very sticky condition, right? I did take a few losses trading this short here on Qs, I remember, but that's part of the game, right? I didn't know whether this was gonna hold and we're gonna get some sort of lower high off of this bar or not, but price decided to move higher in some of, again, the weirdest price action that I've seen. But I had to accept that, and this is what the market was telling me. So on NVIDIA, I did notice that NVIDIA was certainly weaker, right? So whenever identifying distribution bases, one thing that you want to be paying attention to is also price being weak relative to the index that you're tracking. So for example, speaking of today's market, if you guys remember, was it on Monday or Friday? I can't remember which day. It was either, no, I think it was Friday, where Qs was up almost 1% and NVIDIA was down 3%. It might have been yesterday. I'm not too sure. No, I think it was yesterday. It just says Wednesday for me, but yeah, so Tuesday. That is a very, very important sign to take note of, that this name is in distribution, right? The relative weakness that is showing up. Just like when a name is in accumulation, it will be showing signs of strength against a weaker market. So price began to sweep all-time highs multiple times, and then I went short. This is taking a bit of time. I remember going short initially on this day, which was OPEX of August, and I thought I had them, but I didn't. Price ended up squeezing back up just to sell off a week later with a pretty wild sell that I didn't really see coming, at least not to this size, of about 7%. From there, price began to consolidate yet once again back into all-time highs. Now, this sweep up here, right? Whenever I talk about failed breakouts, guys, always remember that failed breakouts, you always want to see some sort of sweep, right? We know this. But if you guys remember, the best failed breakouts will usually come on some sort of catalyst, right? You need that catalyst so that you can actually have a lot of eyes on the name, and eyes from both sides. Mainly from buyers, though, that are getting trapped, right? So for example, I'm sure there were a lot of buyers that were looking to buy NVIDIA because the earnings report that they had was great. Maybe it was great, maybe it wasn't great. I don't know. I don't look into the numbers. I don't look into the financials. I just look at what price is telling me. And what price was telling me on earnings on the 28th was that we were finally getting some volume, right? Some of the highest volumes since the last earnings. Obviously, you take that with a grain of salt, but regardless, some higher volume that led to a sweep in price. And from that sweep came a breakdown in price that led to a nice opportunity to the downside, as you can see here from the high to the low. A few days of consolidation and then a breakdown that eventually bottomed price right into this gap that got filled. From there, price began to consolidate once again, and I do not remember being short near the lows. I caught, I think it was kind of the first 2-day sell, and then from there, wait, what? No voice? That's weird. How about now? Okay, that was weird. I don't know why my Mac just decided to switch out my microphone. It's good now, yeah? Okay, so heading into this day here, right, we got a market gap up. I wasn't short down here. Again, as you guys know, I like to position myself on shorts rather near off the highs than closer to the lows. Right, so all what I was saying was that I was short on earnings, and then down into here I had no position because I do not like to be short near the lows. I like to get my positioning off the highs and then trim into the lows, because I think that the lows into in a uptrend will get bought up, right? You guys always have to remember that whenever we are still in an uptrend, right? Well, if I'm looking to fade the trend, then I do not want to be shorting lows. This is a big mistake that a lot of people make, right? And people tend to wonder, how am I making money trading the downside while the market has basically gone higher over the last couple of months, right? And if you sit and think about it, the reason I was able to make money trading the downside over the last couple of months, even though the downside might have not seemed to be that profitable, it actually was, and that's if you were shorting it off the highs, right? However, everyone that went short of the lows on some sort of breakdown trade, on some sort of gap down, got squeezed out, right? Because the market is in an uptrend, right? I can't remove that from my mind or from my setup, right? No, the market overall context remains in an uptrend, right? Up until kind of the last 2 months or so, but I'm talking about the earlier weeks from in summer. All right, so I wanted to make sure that all my positioning of trading the downside and all my puts came off the highs. As we entered into the lows, you can expect that those lows will eventually get bought up, and that's what happened. So into this gap up, I had no position on the video, and instead I was actually looking for a potential short attempt off of the earnings gap down, right? The day that followed earnings, and you can see you can mark out the gap right there. And what we got was a rejection right out of that gap, which offered a very, very nice opportunity for me to actually trade the downside. And this would be some sort of lower high attempt, right? So you guys know there are 3 main setups that I like to look out for within a distribution. We got number 1, the failed breakout. We got number 2, the daily lower high, and then we got number 3, the breakdown, right? Always remember that these are the 3 setups that I look out for within a distribution, and they're basically the same thing within an accumulation, right? Those are the 3 areas in the chart where I think price is ready for a move. And so whenever I am looking to trade any of these trades, right, I'm always looking to market to one of the 3. If I can't pinpoint which one of the 3 this is, then it's not a valid trade to me. So for example, the climactic action that was here, that was some sort of failed breakout action, right? Because a failed breakout can also be a mean reversion, right? The daily lower high is simply a test into the failed breakout. And then the breakdown is simply a bear flag look, right? So you can kind of dumb them down if you'd like. I don't like making trading a lot simpler than what it is. I think there are some gurus out there that are trying to sell you some products that are going to try to really dumb trading down to like the simplest terms. I don't like using that, but I do like to keep it rather not that complex. So in this case here, this was some sort of lower high attempt, right? Why is this the lower high? You might be asking, why not something down here? The reason for that is because for me to actually think that this is a that this is a valid lower high attempt, then I need price to actually pull into some sort of mid-range of this initial move, right? This isn't going to be a lower high that I'm willing to really short, right? Because it hasn't pulled / consolidated that much higher against the initial move. So when we get this instead, right, this is a much better attempt that I'm willing to size into, because I know that this will either top out here and get the second leg, or it's gonna take out these highs, continue out higher, and now my setup is invalid. Am I making sense with that? I think there might have been a bit of a tongue twister there. Does that make sense? Okay, so that's how I like to position myself. So in regards to this NVIDIA attempt, right, you might be thinking, well, how did he know to go short here and not on these kind of smaller pops? And the reason for that is just that. And again, if you notice, the weak orb that really started this was the day that price actually topped out right there, right? Again, guys, anything that I talk about, please go back and backtest it yourself so that you can actually have confidence in trading it and you're not just blindly trusting what I say. Although I do appreciate it, I still think that you should go and backtest things yourself just so that you see it play out in real time, just like I am right now. So I remember this trade very, very well because it actually offered me such a nice win that I wasn't necessarily really expecting, right, with how the market had been moving throughout this kind of range in early September. But it worked out very, very nicely. And we got that rejection right out of that gap, literally almost to the penny. So that offered me a lower high attempt that ended up playing out very, very nicely from the highs to the lows of 6%. You might be noticing that a lot of these shorts, the underlying ended up moving 6 to 8%. Don't ask me why, it's just how NVIDIA moves, I guess. But yeah, so into that low that was made, right, I started to trim out of my position, right? I didn't know if price was going to continue to break down or if it's going to have to find some buyers out of this gap, right? Because bull gaps will act as support as they get filled. And that I thought to myself, okay, price can definitely stall out here. Let me just take some off the table. Next day, that exactly happened. Price gapped up 2.2% unexpectedly. And I had to stop out of the rest of my position, I believe. Or no, sorry. No, now that I remember, I was actually still positioned. My stop might have been still a few bits higher. I actually got stopped out on the OpenAI day, right? So on Monday to the 22nd, we got some sort of OpenAI deal with NVIDIA. I was still short with some leftover puts that I had that got stopped out on this bar here that came totally unexpectedly. But whenever I see a bar that looks like this on news, I'm automatically cutting my puts, guys. Yeah, I think, was it? All I know is it had to deal with OpenAI. That's all I remember. The specifics of it, I'm honestly not sure. But yeah, so the second I saw that type of news, I automatically stopped out of the rest of my puts. I'm not trying to be smart. Sometimes you guys might hear me saying things like, I'm looking for this news pop to be some sort of exit liquidity, or I'm looking to fade the news, right? And yes, sometimes I am looking to do that, but it won't happen on the first pop that we get. I wait for exhaustion over that catalyst high to short it, right? I don't just go and blindly short news that comes out. I'm not a news trader and I'm not looking to fade news reactions. So after I got that, I decided to take a step back from the setup and just let it kind of breathe. Nothing that I can do, right? I could try to fade this off the highs, but is this a valid setup? No, it's not. I don't see anything that is valid to trade. Sure, we did sweep, right, by however much, literally like I think a penny higher, or like I don't even know how much high, but yeah, this is not a sweep that I consider, right? Because a sweep needs to actually at least have, I mean, just at least this, give me that, right? But this singular kind of piece of price action, I'm not gonna look at that. So from there, price actually did end up selling the news just for it to bottom again and rip out higher, which is where I started to look for my new position, right? So after I traded this range, that's the reason why I kind of split them up, because this was the initial failed breakout that I was looking to trade. And then after we took out these new highs, I was looking for a new failed breakout to potentially trade, right? Because looking at the weekly, I thought to myself that I don't think price is going to continue higher. And I think that this could very, very easily sweep these highs and fail. So what ended up happening was price did set up an opportunity, and that being the late bull flag trap slash a failed breakout, right? They both kind of set up similarly on this day here, and that's when I was short. Unfortunately though, I was wrong and it wasn't a trap, and price ended up working and I took a loss, right? Part of the game. I'm not gonna stay short and hope that price holds. Instead, we got a squeeze out, and then that led to the October 10th sell bar on the China news. At this point, I wasn't focused on the video. I believe I might have had a small position, but I was mainly focused on the iron parabolic short, which was set up on the same day on the 10th. I was focused here. I might have had a small position on the video, but nothing of heavy positioning that I remember, at least. From there, I thought that we could potentially be getting a quick breakdown opportunity down here. As price lost the daily moving averages and began to consolidate right here, I took a short off of 184-ish, and I caught a nice move of about 5%. And I was looking to actually trade this down into this gap here. And I was sized very, very heavily. I believe I was up on my account on just these 3 days of action about 25%. And I was hoping that it did stick and continue down lower, but the next day we gap up and I had to stop out. That led to the euphoric parabolic short opportunity off of 200. When I saw this, I was like, okay, scratch everything that I've just been looking at. This is a new opportunity with a parabolic move and a very, very euphoric move up into a very, very key level. 2 key levels actually, one being the 200 psych and the second being the 5 trillion market cap. I'm not a guy that pays attention to market caps, but when you see a 5 trillion market cap for the first time ever, you do want to be paying attention to it, which was right around either this day or the day after. So after we got that climactic look, I was definitely interested in trading this, and I remember catching the exact top almost to the penny on one of these bars, and I went short with puts that were expiring in 2 weeks, and I caught this initial leg and then stopped out of the rest of it on this day here, and then I added back. Where is it? Right there. It was on this day here, I think, or the day after. One of these days I added back for some sort of lower high attempt. Although it was a bit too high of a lower high, usually I like my lower highs to be kind of defending this range rather lower. But it was still an attempt that I was willing to trade, because we look at the daily, right? This is still a short in my books. So I went short and I finally caught a big move, and I caught it from all the way up into 210 down into the lows near 180, which was a pretty crazy move. I remember my contracts netted me about 600%, and I ended up taking profit right around the lows. From there, price actually ended up gapping up, and when I saw that big gap up, I was like, okay, this is gonna set up yet another opportunity. However, one thing that you guys need to know is that I'm not looking to automatically go short on these ignition days, right? So as I mentioned, right, let's just go ahead. I have a lot of chunks I need to clear. I hope when I actually sit and draw these examples, they are very, very helpful. I really like explaining kind of some things using them. But yeah, so what was I talking about? Okay, so one thing you guys need to also note about my trading and the way that I think everyone should trade is that you're not automatically looking to go trade some sort of impulse move, right? So let's just say we get an initial leg down, right? And let's just say this spanned over 3 days. And then on one day, we get a big gap up of, let's just say 2-3%. I'm not automatically looking to go short right there, right? Like let's just say now we're talking about the daily time frame, right? I'm not gonna go short on the first day up here. Instead, what I'm gonna look for is this. So we get the initial leg, and then we get some sort of pop. I want to look for price to kind of consolidate right here, maybe exhaust to the highs, and then I look to go short, just so that the premium can kind of cool off, and I'm not first to the short, right? Because there's a lot of people that are going to be trying to fade the initial gap up, and that's usually going to fail, and then the kind of slightly later shorts will end up profitable. Kind of similar to what we actually had on QQQ today, and even what we had here. Right, like if I see a bar that looks like this, a gap up of 1.5% and follow through of 2.5%, I'm not gonna go and short this off the highs. This action is too strong for me to short. Right, you guys always have to be thinking of that as well. Right, so instead, I'm gonna look for exhaustion near this candle to actually look to trade the short. All right, so instead, that's what ended up happening here on Qs. And it also happened today on QQQ. There's a lot of people that tried to short the initial day up yesterday, and that failed with a gap up today. And then today's gap up actually stuck price, and price moved all the way lower. It's the same thing with, for example, shorting this bar here. That is not a good short because volatility needs to contract and it needs to cool off before getting ready for some more volatility. That is something that is always on my mind, and that is volatility is limited. Right? That's how I like to think of volatile price action that I see. If I see a very, very wide bar or a very, very wide impulse candle, I'm not looking to go and trade the next leg, whether higher or lower the next day. No, I want to see at least 2 or 3 days, right? Depending on the size of the bar, and then I look to whether I want to trade the downside or the upside. All right, so always be thinking of that. And that's why you guys might be thinking, well, is he just talking in hindsight? Why didn't he try to, for example, go short somewhere around here and took a loss on this day? It's because I didn't see the consolidation that came after that impulse move, right? Whenever we have such a big volatile move of 15% in 4 trading days, I need to wait for consolidation after that, whether it's higher or lower. I need volatility to contract, and then I look to trade the volatility expansion that comes afterwards. So at this point here, I did not catch this short. There was no valid setup that I saw. One day of price moving higher is not enough for me to think that this is a lower high that I'm willing to short. So the lower high was actually up here that I shorted. From there, we're also heading into earnings, and on earnings, you guys know I hit a very, very big trade on the earnings short. So into earnings, I had no position. I was just sitting here watching price, and I was just hoping that we got a gap up, because obviously if we got a gap down on earnings, right, I would have definitely missed out on the bulk of the move that I was watching for this entire time, which is the NVIDIA breakdown, which I never would have got if we sold off on earnings. But you can't think like that, right? You got to be focused on the process and not the outcome. We've talked about this many, many times, right? So I can't just go short into NVIDIA earnings with puts and hope that NVIDIA sells because price is in distribution. No, that's not a good setup. That's not a trade that I take. Instead, I'm just going to sit and I'm going to be patient. I'm going to hope for a gap up. If you don't get a gap up or we get a gap down, so be it. I can't be mad. That's what the market decided to do. The market doesn't hate me. The market isn't my enemy. That happened. I'll move on to the next setup, and there's going to be another setup right around the corner, right? But on this particular day, NVIDIA did actually end up gapping up and offering a very, very nice trade opportunity, and I'll dive into it right now. So into earnings, right, we can obviously all see the distribution that's taking place with price looking very, very ready for a breakdown or just for the distribution to continue to play out. And the gap up on earnings really, really gave us a big, big opportunity. So we gapped up 5%. And let me just say this, I'm not the biggest fan of trading earnings days. From this NVIDIA trade on November to today, I do not remember trading any other earnings report. Right, I just want to put that out there. Not my style of trading. However, when a chart looks this good and the earnings pop is actually offering us a great opportunity, the contracts are priced well, and there's good intraday price action, which I'll dive into right now, that I can short, then sure, I'll trade it. And as you guys can see here, I simply wrote massive earnings failure and larger time frame lower high. So let's dive into the lower time frames here. You guys can even see the opening print that I had marked out still. I'm happy I didn't delete my drawings. But yeah, so we get the gap up, right? And I'm thinking, okay, this is perfect. This is going to set up such a nice opportunity. Whether it's a day trade on earnings or it turns into a swing, I don't know. But I just know that there is potentially a fade opportunity to set up off of the open. And we are right off of the 195.60 spot, which was the previous high that we had from back here. Right, pretty easy level to be paying attention to. So intraday, what did we get? Let me actually open the 5-minute here. So intraday, right off the rip, what do we get? We get a weak orb. As I mentioned, guys, time and time again, the weak orbs are a game changer. Total game changer in attempting the downside, especially in ranges that are kind of still building out, or not necessarily when the market is in a downtrend. So on the video, right, market opens and we get the initial sell-off, right? So I could have easily sat there and thought, okay, this might be some profit taking from earnings, or it could be a proper sell, right? I don't know at this point. All I know is I see a sell bar that comes in. From there, I'm looking for some sort of lower high to short out of the sell bar, out of the orb. And you guys will see this bar, and that's when I went short. I went short right there off of 194.20-ish. As I saw that price begin to reject out of there, I added my puts. Price did end up moving higher against me the next bar, so I was in some slight drawdown, but I was below the opening print, and that's my stop, as it almost always is on my short opportunities. So that was about a 1% stop. From there, my first target was going to be the overnight gap fill, which was about a 3.8% move, and that's already a 4R. Lovely stuff. So as we sell off, right, price actually rejects out of the opening point. I'm like, okay, cool, this looks great. And then selling begins to really get aggressive. Price begins to fall lower. And then as we fill the gap, I took my first bit of profits, and then I held on to the rest, and things got pretty ugly into close, as you guys can see. I believe I might have trimmed some more down here near the previous day's low, just in case price decides to sweep it, which it did try to do here. So I did take some more off, and then I decided to swing the rest into the next day. Now the next day, market opens, we get another lower high. Obviously I'm not adding more, I'm already positioned very, very nicely from the previous day. And at this point, the underlying is actually 8% in my favor, and the puts are doing, I honestly couldn't even tell you, I don't remember, but certainly some very, very nice numbers. And so I begin to take profit right near the open and leaving some more on the table. And then as I saw this high volume bar pop in, you guys can see this was definitely some higher volume right at the lows, right? Whenever you see volume that is higher than the open for the intraday session, you want to be paying attention to that, right? Because that can sometimes mark the intraday session low or the intraday session high. So in this case, it marked the low, and I decided to take my position off the table here right as I saw this rejection or this pop from there. So took my win. It was certainly a decent sized win that really got my account moving. I could not remember exactly what my P&L was or what the contracts did, but I was sure it's between 200 to 300%, so 2 to 3x, somewhere around that. With the underlying from entry to my exit being a 10% move in 2 trading days. So just an insane opportunity that I was very, very happy that I capitalized on. And I did end up selling right near the low. So when you see this type of action, right, this was a very, very big move of 12% in 2 trading days, right? So you don't really need to be short after that. Price is more likely to at least bottom for some time. I was still targeting down into 170. I did want to see that, which was this gap. But when I saw that really, really high intraday volume at the lows, I was like, you know what, okay, let me just take it off. I'm up quite a ton. I don't need to hold on to this for any longer. And we also did see some higher volume here, which is not usually the case after the earnings day. Usually the earnings day is going to be the highest. So from there, I had no short, and price did actually make a new low 2 days later, but I wasn't in any position. Funny enough, that's exactly where price actually bottomed, right at the gap fill, which was my initial target. From there, I had no position. I was just kind of trading a few other names. I don't remember what exactly, but I did still have NVIDIA on watch for a daily lower high attempt, right? So now price is moving back into the range, into the daily moving averages, and setting up for a short opportunity. I believe my first opportunity was on the 2nd. It was kind of a break even or base hit trade that got stopped out kind of on the 4th, I think. Nothing that was really serious. But the positioning, my kind of eyes lit up once I saw this. Price started to kind of sweep, and I believe we had some sort of news here on Monday, the 8th. And I also did pull my fibs because price did have such an impulse move. And I'm not the biggest fan of fibs. You guys might see me sometimes put them on my chart, but I mainly want to put them whenever I see an impulse move and I need to kind of visualize where a lower high or a higher low can come in just by pulling out the fibs, which is the 50 retracement, which is just half the move, right? So that's what we got right here. So as I saw this bar setting up and sweeping also this kind of high that we made, I was like, okay, I think this could be potentially setting up for another opportunity. And we also had this trend to trade off of for potentially a breakdown opportunity. So we go down to the hourly. This chart is getting kind of messy, but I do not want to clear too many of my drawings. So let's just clear this one for now. And I think we can clear this one as well. And then we don't need the moving averages either. Okay, so we got hit with some sort of news on Monday that got faded overnight, right? So whenever I see this, I'm always paying attention to it because the catalyst that we had clearly did not stick. So I was like, okay, we could potentially have an opportunity here. So from there, right, price began to consolidate after it sold off overnight, and I believe I got some sort of position somewhere near kind of intraday here, right as we got this pop and we held the opening print. Nothing that I was really sized heavy on. It was more so of a roll opportunity off of earnings, and then that ended up playing out, and this was another lower high that I was looking to short, as well as some sort of breakdown under this trend line, and that's what we got. So we got some nice action here. I took some profits on this hammer bar that came here. I don't need this anymore. And then I held on to the rest of my position. And the next day we actually got a pretty nice bar to trade off of, or for some sort of continuation. And then I ended up taking the rest of my position, I believe somewhere near 175-ish. And then price ended up making a new low, which I was not positioned in for. Whoa, that skipped a lot. So on this sell here, I don't think I was positioned. I believe I might have taken the rest of my position off somewhere on these two bars because I had shorter dated contracts. And as you guys know, with my downside, I'm not buying a lot of time. I think leap puts are some of the dumbest trades that someone can do, just because when the downside does come, it comes quick and you don't need time for that. The market does tend to move higher, so why would you want to be short over long term? Instead, I like to position myself short on a shorter time frame, shorter term, whenever I see the chart setting up. So that's what happened here. So after this bar here, I was no longer short. I had no trade opportunity that I saw here, which I was kind of annoyed at because looking back at it, I thought that the market, that NVIDIA could actually break down under 172 here with this inside day, but I just couldn't buy this one singular inside day with no true consolidation, right? Because price just moved lower here for a couple of days. We didn't really get any sort of sideways / pop higher that I could look to short. And thankfully I made the right decision and I had no puts down here, and price began to squeeze back up to the highs on December 19th, which was this action here on QQQ where Q's found some sort of lower high here. And I remember I was actually, if you guys were following my Twitter, I was calling for this to potentially be a bear trap under the 50-day, just because price action isn't going to kind of U-turn off the highs and just continue to waterfall. It's more likely to find some sort of lower high as everyone got bearish at this bar here after price had already sold off a couple of days in a row and then consolidated before moving lower. So that was kind of similar to what Nvidia was doing, and then it decided to squeeze back up. And then that led to the current price action that we're seeing, which is when Nvidia began to set up the late bull flag trap, which is one of my favorite setups to trade. And I did take a few attempts shorting Nvidia throughout this kind of range. Got some wins, some losses, nothing that was really significant, nothing that stood out or made a really big change in my account P&L up until this day here. So throughout this kind of range, I'm taking a few base hits, a few losses, but no true or rather larger position. I do remember being short into this day here, and I thought this was gonna stick, but we filled the gap and got this hammer bar that I had to stop out of, right? So whenever I see a move like that out of this gap and a larger wick, I don't want to be short the next day because this could have easily trapped shorts. And if you go down to the lower time frame, you can actually see that happen with this bar right here. So I'm not going to be short after seeing this, an undercut of the previous or of the current low of day into the gap fill with a lot of volume coming in, and a certainly rather bullish bar that came in off the lows. So I decided to just remove the rest of my position and made the right choice. With the next day, Nvidia ended up gapping up 2% or whatever it was. Yeah, right around 2%. So back again, no position, and instead I'm just looking to trade a new potential opportunity, and we got that a couple of days there, the next day actually. So the next day we got we got a weaker close on that day that I was just talking about, but I had no position. Whenever we get this weak close and then we got a big gap up with a thrust higher that swept the previous day's high, I decided, you know what, let me reattempt this. Right, so I waited for the confirmation, and my entry wasn't the best here. I entered a lighter size because with a worse entry, I don't want to be buying taking too much size, of course, right? If you have a bad entry, a bad spot to be buying, or a slightly expensive fill, I'm not going to be looking to take size on that. Instead, I'm just going to be looking to be light and then potentially get more ads the next day, right? So that's what I did here. I got a very light position right off of 188, kind of this kind of trend line here intraday that eventually did play out nicely into close. Swung my position to the next day, and that led to Tuesday after the long weekend with a big gap down. So on the big gap down, I did kind of go slightly on tilt somewhere within this price action. I'll tell you guys why in just a second here. So into the gap down, so I'm positioned lightly, right? And when I see a big gap down, I was kind of annoyed because I wasn't able to get my full size position, right? Because there just wasn't price action that I was willing to really size heavy into. But we got a gap down and my position was up 100%, right? I'm not going to be that guy that's going to be mad and kind of sound greedy, but still I wanted to get at least some proper positioning in this, and I just couldn't. So when we gapped down, I was up 100%, but it was rather a light size position. So what I did, which was me slightly being on tilt, was I got some aggressive ads. And those ads came intraday off of this pop here, which did end up working out. And I was able to size closer to a full size off this intraday pop here, which is not a position that I would like to usually put on, right? But because I saw that big gap down and I was rather bothered by it because I didn't have my full size, I was trying to find a way in. And eventually I did, right? It wasn't the best ad, but my risk management was still pretty good on it because I was risking what the opening print as always. So it ended up playing out into close, and we actually got a pretty big sell-off into close of 2%. So into the next day, I decided to hold on to my position. I might have took a small trim, but nothing that was really significant. I was still sized pretty heavily on this day. And what I thought was to be a kind of gap and go low, right? So this would be the breakdown gap with follow through that will lead to a couple of days of momentum lower, at least down into 174, which we did not get. So the next day, I went on some sort of slight tilt. This was part of the story of the first day. So I wasn't full size here, I was rather heavier, but still had some room to add. And I ended up adding very, very successfully at the exact high of day. which also came off of the fib zone right around here. Or was it one of these? I either had the chart played out like this or like this, but essentially I got a very, very nice ad right at high of day as I saw price squeeze out intraday, and it offered a nice ad opportunity. I get that follow through, and now I'm up again 100% on the same position, and I'm looking for the move down into 174. But what ended up happening was we got the Greenland news that I ended up having to cut my position for a 15% loss, because when you get news like that and price squeezes out higher, your put premiums obviously gonna lose a lot of value, especially if they're shorter dated, which mine were. So I was certainly very, very annoyed, but I had to cut most of my position. And then the next day, another kind of opportunity, but nothing really sticking. So then I just decided to take off the rest of my position. And then I started to get interested in the trade again, which leads me to today's short. So I took another kind of small loss on this day, I think it was. Yeah, I shorted it right off of the sweep here around 190. Got some leeway, but I think I ended up cutting it for like a 5% win or something like that because I didn't get a weak close. And then we get into the crazy action, which leads us to today's short that I'm currently positioned in. I'm happy that this happened today because my plan was initially for the 3 days, for day 1 to be the short, the day 2 being the long, and day 3 being the mean reversions and the setups and the charts to break down. So I'm happy that this short did end up playing out today because it led me to the same chart that I've wanted to break down with you guys throughout this entire bootcamp, which is this chart that I've just studied time and time again. So what do we get? So we get the crazy day on Thursday, which was some of the weirdest action that I've seen on QQQ with this sell-off here on Thursday the 29th. So on this day here on NVIDIA, I actually had no position. Although it did offer some sort of sweep off the highs, right, and it did end up playing out, I actually was not positioned because I was focused fully on gold. So obviously when I see an opportunity just like gold, I'm not going to be trading in NVIDIA or QQQ. I'm going to be focused all on that opportunity, which was by far my best trade of my career. New record trade on the P&L as well. So I was happy that I did avoid NVIDIA, and because as you guys see, some very, very crazy price action with a V recovery into close. So I was very, very happy that I decided not to have a short position on NVIDIA on Thursday. I was short ARK, so I did have some exposure to the equities market through ARK, trading that to the downside. But in regards to NVIDIA and tech, I had no position. So, and that was the right decision to make, which led me to the next day. So on Thursday, right, I was coming off of this massive win on gold. Trimmed, I think it was, I took my full position off on gold, and I was coming off of this very, very big win. And when I'm coming off of big wins, I tend to make mistakes right after that, because I'm sure you guys have experienced this yourselves. After you come off of big wins, your ego gets inflated. You start to think that you're the best trader, and you think you know a lot more than what you actually do, and you just think that everything you touch is gonna turn into a win. I started feeling that way, but through my experiences, I knew that when I feel that way, I should take a step back. And I did just that, and I went into the next day, mainly cash, just with my ARK swing. I might have had another position if I'm not mistaken, but nothing that was of any proper sizing. So as I saw that price, I was still looking at QQQ and what it was doing, and as I saw that price did squeeze out to close, right? Because if price close at low of day, the short definitely isn't. There is no opportunity to go short the next day, right? Because I'm not gonna go short at the lows. But since I saw price squeeze out to close, I was like, you know what? Let me just keep this on watch and see what happens tomorrow at open. So on Friday, last Friday. If we get a flat open or a slight gap up, then I do think the short is back in play. If we get a gap down, then I'm going to take it off. I'm not going to be trading. So what we got, and at this point, I was watching both QQQ and NVIDIA, and I believe MU might have also been on the focus. But mainly NVIDIA and QQQ. So NVIDIA, what we got was an even bigger move than what I thought would happen with a flat open. We actually got kind of a flat open, but what we got was a thrust higher. And right as I saw this thrust higher above the previous day's high, I was like, okay, this is a gift. I mean, I couldn't ask for anything cleaner than this. We get a total squeeze out into close, followed by a thrust higher the next day, on slightly increased volume right here intraday. I was like, okay, I need to take this. There is just no way that I'm gonna avoid this. I'm gonna look for the sweep, which was also a very, very big level, dating all the way back to when this kind of hourly mini distribution started to play out, right? With the late bull flag trap being the setup that I was looking to trade. So we got just that. So I took my position right on this bar here as I began to saw price reject, and I was trading with very tight risk at high of day. And fast forward a couple of bars, price action is moving very, very well in my favor. And usually when I see that, I know that I potentially have a big win on my hands. My biggest trades will always come with very, very minimal drawdown. I've said this time and time again, that continues to show. The trades that give me zero stress from the start are usually going to be the trades that turn into big wins. And that is what ended up happening here on the video. So we get follow through into close, and I was sized nicely. I wasn't sized full just yet, but I was able to take some ads on some of these pops here intraday. So we fast forward a couple of some more action. We get a close that's in my favor. My position is up and is looking good. And then the next day we get a gap down, which is actually Monday. So Monday open, we get a gap down, and then I'm not looking to add anything just yet. I'm just watching price action. We get a move into the highs, and then we begin to kind of sell off into close. So I was like, you know what, let me take a few more ads. So I took a few more ads, and now I was full sized on my NVIDIA, with most of my ads coming on Friday and just kind of 2 or 3 contracts that I added on Monday, so yesterday. You get that big sell-off into close, which I wasn't really expecting. It just came out of nowhere, and price was very looking good in my favor. I was up about 75%, I believe, into this low here. This gap is no longer needed. Let me just delete that. The gap that is needed though was my main target, which was right here. Let me just make sure I have it marked out properly. So into close, this is what price action is looking like. And to me, what I was thinking was, this was without a doubt a bull flag trap of dreams, right? With a big sweep of this level, with some crazy price action. And now price action is looking very weak relative to the market, right? Because if you look at QQQ, this was a rather stronger day on Qs, right? Same thing with SPY. Certainly a very strong day, but NVIDIA, big difference, right? So I was like, okay, this is showing more and more signs of that distribution that I've been looking out for. So I decided to swing my full position, right? This is what the hourly looked like. I was like, I'm not trimming any of this. Why would I, right? This chart looks amazing. Even though it did fill this gap, still, I'm not interested in taking profit just yet. I think that this can move all the way down to fill this gap here. Why is the gap not showing? Into 175. So I stayed in my position and I swung it into today. And today off open, I was actually in class, so I didn't see that big sell-off happen. I just opened my phone, I was like, wow. So we get that massive sell-off, and then right near kind of 180, I took just a fourth off, and then I was like, I'm not trimming anymore. I want that gap. I want that gap. And then into near close, we actually do get a sell-off yet again, right into the gap. Not into the gap fill, but regardless, this was the first test of this bull gap since it was created, right? Since the gap day happened, we didn't test into it up until today. So I decided, you know what, I gotta trim some more off, and I trimmed down into half of my position. So I think I had 20 contracts, I'm down to 10. or I had 19 and I'm down to 10, something like that. So I have right around half. And I decided to swing that into the next day, and you look at the daily bar, and wow, just what a bar. Right now we have lost the daily moving averages. We are looking for this to be the ignition day to actually move us lower. And as you guys will see in a few days, right, a lot of people are going to start to attempt this as NVIDIA begins to probably consolidate against this bar. And that will set up a nice opportunity without a doubt. But I'll happily say that I was positioned well before that, when no one was really looking at this being a potential short. And then when this does happen, maybe I'll look to roll, or maybe I'll still be in my position. But I do think that this can go to 150, which sounds crazy. I know that is another 15% move, but I do think we can get that. We do have earnings coming up soon in 20 days or so I don't know when we'll get that. But for the rest of my position, I would love to see at least 170 for me to take it off or down into 173. We could also maybe test into the 200 day. That could be a level that I'm potentially looking to take my profits out of. But yeah, the rest, kind of third/half my position, is what I'm looking for to be a home run trade. That pretty much sums up the NVIDIA chart and everything that I traded on it so far since the day of July 31st. This has been a chart that I've been absolutely in love with, and as you guys saw me walk through it, there has been so many trade opportunities setting up, and it will probably continue to do that, and the bulk of the move hasn't even started yet. It'll start probably right when we set something like this up that leads to the actual breakdown of the base. This has been basing for 6 months now, which is massive. The last time we based was from November to Feb, so around, not even Feb, to Jan, around 3 months or so, and that led to a 41% sell-off, right? You don't need to necessarily compare it number by number, but just to have some sort of idea of how big this base really is. It's really massive. And yeah, PLTR, this was also this very similar setup to NVIDIA, and I'm also happy that this ended up playing out also during the boot camp, because you guys saw me break this chart down before we got this leg lower here, and it set up such a beautiful opportunity, which it could even be setting up another opportunity with the gap up today on earnings. You just need to see some consolidation here, and maybe it'll set up an opportunity. But yeah, that pretty much sums up the NVIDIA chart, which is what I wanted to talk about in regards to trading the downside and trading distributions. Do you guys have any questions about distributions? Today is the last day that we kind of talk about distributions, trading the downside, the next 2 days being about other setups, and then the last 2 days or so being trade management and more so of a broader Q&A. I really hope that after all of these sessions about distributions, trading the downside, you guys feel at least more comfortable attempting the downside. I don't expect you guys to go tomorrow and just begin buying puts so often, but rather at least be open to trading the downside. So the flat open significant is just that it's not a gap up or a sell off of the open. What do you mean? Are you talking about today's action, that today was kind of flat? So usually the flat open, most of my trading, right, my execution comes not usually off the open, but it's just when we get a flat open, I'm more open to trading it off of the open. So in regards to Avgo, I'm pissed off at this chart because it ended up playing out very nicely today. But in regards to this chart, I believe the short that you're talking about is on January 8th. Is that correct, if you remember? Because I did also short it last week, but I think you're talking about January 8th. So in regards to this, the flat open was important because to me the chart looked extremely ready. Right, so let me actually go back one more day. So we got the initial wedge kind of pop lower, and then that led to a double inside day. So to me, the lower high was already in place with this here, And we also got the wedge pop slash drop, and then after that we already got two inside days. So a move higher, a gap up, would basically make this untradeable for me, because this initial wick here should stick, this should hold, right? And a gap down would just mean that I'm going short slightly too late. So what I needed was a rather flat open for me to actually successfully execute this. Maybe some kind of slight pop into 350, but I wanted to rather see a flat open. And when we got that, right, I was like, okay, this should stick off the open because everything is set in place. I don't need price to move higher to find more liquidity off of a lower high. And I don't need more confirmation by seeing some sort of sell bar to come, right? Because I got all my confirmations prior with this wedge drop followed by 2 bars of consolidation. So this was as ready as it can be for a momentum breakdown short. However, with me blindly buying puts off the open, I'm not going to size heavy into that, of course. So I bought puts right at market open, and I was definitely lighter sized on it. And then potentially looking to add if we can consolidate against the open, but we never got that and we just ended up flushing lower. Does that answer your question? It's more so about the readiness of the stock that I'd be willing to trade a flat open. Yeah, for sure. Yeah, flat opens, they don't tend to happen that often, and I don't usually buy options off the open. I think that's a bad habit to have, just going ahead and buying things off the open. I rather wait for the orb to form. But if a stock is very, very ready, we have the lower highs, we have the confirmations, we have good fills, we have an inside day to trade off of the day prior, and we get a flat open, then yeah, I'll take a light size off the open. I would never buy full right off of a flat open. But I'll definitely take at least a starter and then potentially look to size into it. Great, thank you. Lily? Oh wait, I just realized. Yeah, this was very, very clean. Certainly a very clean setup actually. Wow, I did not see this setting up. Starting with some sort of failed attempt here, consolidation, and then this kind of breakdown slash lower high attempt. Yeah, definitely a nice opportunity here. It's not a name I'm very familiar with trading though. But yeah, nice opportunity. How do you look at relative strength, for instance, between iron and NBIS? So relative strength is just simply watching for, to me at least, is just simply watching price action as of the last couple of days slash hours relative to QQQ, which is the index that I mainly track. So if I look at, for example, if I'm going to compare both of them, iron with NBIS, well, iron is clearly on the stronger side because it is still above its daily moving averages, while NBIS is below them. So that's a sign of iron being stronger than NBIS, and I'd rather be long a stronger, slightly stronger name than a relatively weaker one. Yeah, Lily has some expensive contracts. Yeah, iron has some high V. Iron moves like crazy. Also, guys, as we wrap up the bootcamp and enter into the last couple of days, I will be opening a channel for testimonials. So if you guys would, it would be greatly appreciated if you guys can leave just a testimonial if you guys did benefit greatly from this, or even if you guys have just some sort of feedback about your experience, it would be greatly appreciated. I will also be hosting a small giveaway towards the end of the bootcamp in regards to a program that I am launching in June, which is going to be a mentorship with live analysis all in one. It's going to be my only spot where I'll be posting my analysis. So I'll be giving away one spot on that to one lucky winner from the bootcamp. And for entry, it'll be through the testimonials to enter into the giveaway. But more on that soon. Just wanted to give you guys a heads up that I will be opening the testimonials channel, and it would definitely be appreciated if you guys can put something in there. Granted, today I had been really not struggling, but not the best at knowing which pop will sell off and which ones won't follow through. Yeah, it is tricky to know. It's just about really trying to make sure that your execution is on point. Like for example, I did attempt some SPY yesterday. I thought that yesterday we would have topped out as we kind of swept somewhere near the previous day's high. Never got the move that I wanted though. Swung into today and was able to actually take it off break even. So I was kind of lucky with that. But yeah, it's just, you never know, just about making sure that execution makes a lot of sense. They've been getting better with attempting shorts, which is what I wanted from most of my experience. Yeah, thank you. I appreciate that. I think I'm very happy with the way that I was able to build my shorting systems, and I'm glad that you were able to benefit off of them. Yeah, and the video was tricky. It happens. I just wait and see a potential opportunity to set back up again. Don't rush into buyback or to make back what you lost. I'm sure there's going to be a short opportunity right around the corner. Yeah, great job. That's the key, right? You want to start to potentially position as the volatility contraction kind of ends and we start to enter into expansion. Let me take a look at path. No idea. Not a setup that I would be attempting. I do think the weekly on this is a good look and one that is probably in accumulation, but I'm not going to be a guy that tries to kind of bottom fish this and find the day that it bottoms. I got Friday close. I should have gotten today. I closed. Lesson learned. Yeah, as long as you're learning lessons from your experiences and from your trades, then you're doing what you got to do. Really helps with choosing only the best entries. Yeah, definitely. Being late on the downside is one of the worst things, one of the worst trades you can do, especially when the market is still technically in some sort of uptrend on the larger time frame. So I'd rather be early than be short the downside. And then again, with scaling in, you can always be early and you're not going to get burnt out. You take a small position, you scale in, you get a feel for the tape. It works, you add into it. It doesn't, you cut it for a small loss and look for another opportunity. Yeah, it happens. I was also one that would always look to go short on low of day breaks, on orb low breaks, on breakdowns far away from the moving averages, right as fear starts to pour into the market. But yeah, none of that is how proper shorting actually works. Proper shorting is actually a lot more I want to say tricky. It doesn't show up usually as easily, right? It's not something that a lot of people are going to see as an opportunity, but that's usually when the opportunity starts to potentially play out. Yeah, thank you, bro. I appreciate that. I'm glad. Yeah, I like keeping it usually off. I'll just turn it on if we have some sort of overnight action that's rather made an impact on price. But yeah, so should I end the stream? You guys have any more questions? All right, if not, let me go ahead and end it here.